Hi guys, good morning. A brand new week from the Money Control Studios. I'm Nandita Khemka and we'll be talking about the setup for trade, all the stocks that have been focused in today's session. Of course, also the fact, that whether or not we are looking at 25,000 on the index this week itself or not. It's a truncated week. We'll have a market holiday on Wednesday. So going into this truncated week, are we going to see profit booking or are we going to see higher highs on the index? Lots of stocks in focus. HCLTech, the entire IT pack will hog the limelight once again. You have DMart that will be reacting to its numbers that came out over the weekend, and lots of big numbers slated for this week as well. So yes, lots of action over the next half an hour. We will be getting all your stock related queries addressed by our experts on the show. So if you have any queries, keep them coming in on our live feed on YouTube and we'll try and take them up. But of course, before we do all that, let's take a look at the top headlines at this hour. Dow hits fresh all-time high to end above the 40,000 milestone on Friday. The blue chip index clocked its best weekly performance since May. Meanwhile, Asian markets climbed as investors assessed the assassination attempt on Trump. China GDP numbers also came out and they have missed expectations. The GIFT Nifty, although, is hinting at a mildly positive start for our own market. Crude snaps a 4-week winning streak with Brent dipping below the $85 a barrel mark. Gold loses some shine but manages to hold on to that $2,400 an ounce mark. HCLTech's first quarter numbers come in slightly above estimates. Constant currency revenue declines 1.6% sequentially versus an estimate of 2% fall. The company has maintained its FY25 revenue guidance of 3 to 5%, I beg your pardon, and margin guidance of 18 to 19%. A sharp spike in food prices takes inflation to above 5%, the highest in the last 4 months. Vegetable prices rise over 29%. Meanwhile, IIP for May accelerates to 5.9%. And former US President Donald Trump was shot in the ear in an assassination attempt by a gunman at a campaign rally. The gunman was killed by Secret Service officials. One attendee was killed while 2 others were critically injured in the incident. US President Joe Biden has called for unity and condemned the violent act. All right, just about 5 minutes to go for the opening bell, but let's quickly take a look at the setup for today. Of course, we did surge to fresh record highs courtesy the IT index on Friday. Broad-based gains in the IT sector. The top 6 movers on the Nifty on Friday were from the IT pack. The markets, have gained for a 6th consecutive week last week, and it was the longest streak in 2024. The big gains on the IT pack, of course, helped both the Nifty and Sensex clock gains of somewhere around 1% or thereabouts for the entire week last week. The Nifty Bank Index, however, snapped an 8-week winning streak. It ended, in fact, it gave negative returns last week. If you look at the top contributors on Friday's session, they were TCS, Reliance Industries and Infosys. Those were the top contributors on the gaining side on the Nifty. But, before, we head into the opening bell, I want to quickly bring on board our guests for today. There'll be somewhere around 11 stocks that will be in the F&O ban. There's been a new entrant, GMR Airport. Aside of that, Aditya Birla Fashion, Balrampur Chini, Bandhan Bank, Chambal Fertilizer, GNFC, IEX, India Cements, Industars, Piramal Enterprises and RBL Bank. So 11 stocks in total in the F&O ban. But to understand the texture of the market and where we are headed from here, let me bring on board Aamar Singh, who is the Senior Vice President at Angel One. Aamar, thanks a lot for taking out time and joining in this morning. But 25,000 is almost here. We ended above 24,500. What is the setup looking like for the week? It's a truncated week, but 25,000 or profit booking coming in at higher levels? Your take?
Yeah, I would say that markets definitely, the bulls have the upper hand, and that is quite evident the way the index has moved up. And also, if you look at Nifty, as you rightly said, the IT stocks have had a significant say in terms of the Nifty rally. So I would say that the possibility of 25,000 being reached this week itself might be slightly difficult. Because we've got some major heavyweight results, Reliance and HDFC Bank. HDFC Bank is over the weekend. But I would say that the trend remains positive. Yes, Nifty's got some crucial zones of resistance on the upside around 24,000 600, 650. If that's sustained, then we could definitely see it rally. And also what's happening is that the shorts are getting trapped because the shorts didn't anticipate such sort of rally post the sharp correction in HDFC Bank. Also, if you look at the derivatives data, there is more of put writing happening. So that is bullish for the market. And also we've seen some long build up happening. So the triggers are overall positive. And as you said that the US and the global markets have also been positive. So there are not much of a negative I would say news flows, but we'll have to watch out for the major quarterly results this week, which could have some impact on the markets.
Okay, particularly want to get your thoughts on the bank Nifty because after hitting 53,000 and then we started getting all those first quarter updates from banks, and post that of course there's been some bit of weakness on the Nifty Bank Index. Last week it snapped out of an 8-week winning streak. Would you expect Nifty Bank to continue to remain on the downside, or what are the levels you'll be watching out for in terms of support going forward?
Some of the technical indicators from a long-term perspective, they are indicating that we could see some sort of pause in the Bank Nifty. So on the downside, Bank Nifty has got very strong support around the 51,700, 800 zone. So any pullback of 400-500 points could be a buying opportunity because the intermediate term trend, the long term trend still remains positive for Bank Nifty. However, Bank Nifty has been underperforming with regard to Nifty. On the upside, the immediate zone of resistance for Bank Nifty is around the 53,000, 53,200 levels. But on dips, it is a buying opportunity till the time we see a trend change. And as I said, the heavyweights, how they perform actually in terms of primarily HDFC Bank, Axis and ICICI, that would really determine which way Bank Nifty moves.
Of course, and we'll be watching out for HDFC Bank numbers, as you pointed out, coming out over the weekend. But as we head into opening bell, what's the call on the IT pack, HCLTech or Infosys? Which one is your bet?
I would say Infosys, I've been liking a lot, and we've been positive on Infosys. And Infosys has taken up some very crucial zone of resistance. So Infosys is one to look at. Sustaining above 1730, 1740 is very crucial for Infosys. Sustaining above that level, it could rally towards the 1800, 1850 levels.
All right, that's the call on the IT pack. But with that, of course, that's the opening bell for you. We've opened in the positive zone. 24,560 is where we are at. The Nifty, the Sensex as well, 80,700 or thereabouts. Mid-cap index showing strength. The Nifty Bank Index, of course, has opened with a positive bias. But what I really want to see is how the IT pack is behaving at the current juncture. The Nifty IT pack should come up on your screen. Another 1% uptick coming in there. So a 6% kind of a move in the last two sessions. Want to see what HCLTech is doing. Should be among the top Nifty gainers, as was being, as was evident in the pre-open. Of course, top Nifty gainer for you, HCLTech. Profit came in, above expectations. You had revenues. They were marginal miss. But margin was also a beat. Going forward, the management has said that most of the verticals will do well, barring the financials. But they have also said that FY25 and the second quarter will be better than the previous results. So that stock on your radar. We have had a couple of downgrades also on the stock. But all in all, Street is positive on the IT pack now. You could say that, under ownership is one reason that why IT stocks are being lapped up by investors. But aside of that, let's take a look at some of the other sectors that are doing well right now. Want to see what a Nifty Bank Index is doing. It's trading with positive bias, but autos, they were in a spot of bother last week. They are now trading with gains, 0.3% kind of a gain coming in on the auto pack. Metals are not doing all that well. Of course, we had the China GDP data come out earlier today, and they have missed expectations. So reacting to that, the Nifty metal pack is not doing all that well. The Nifty realty pack has been witnessing profit booking or bouts of profit booking on and off, and today as well it is under a spot of bother. But aside of that, you look at the pharma pack, the PSU banking pack, the Nifty Bank Index as well, autos, all of them are trading in the green. The FMCG pack is trading with marginal gains, but nevertheless trading with a positive bias. So yes, the texture of the market is looking good. We are at 24,565 or thereabouts. In terms of other movers, Tech Mahindra, LTI Mindtree, TCS, Infosys, all of them are trading with good gains, with HCLTech now rallying over 4% or thereabouts. Aside of that, you had UltraTech Cement, that stock is up 1.5%. We've had a brokerage upgrade coming in on some of these cement names like Ambuja Cement and UltraTech. So stocks clearly reacting to that. On the losing side, want to point out Asian Paints is the top Nifty loser. The company will be reporting numbers this week. Last week we saw good traction in the paint companies, given the fact that they have recently announced a price hike. But today, of course, not a good day for Asian Paints. Tata Steel, Grasim, Bharti Airtel, Coal India, these are some of the other losers. But looking at the open, coming to you, Aamar, what would you be recommending in terms of stock picks for viewers this morning?
Yeah, I would say that Manappuram Finance is one can definitely look at. It's taken out some very crucial zone of resistance, and it's earlier its all-time high was 224, so it's trading above that level. So this is one stock one can keep a close watch on. The other, as you said, from the IT space, Infosys is definitely one should keep under one's radar. It needs to sustain above the 1730, 1740 zone. That's going to act as a zone of resistance. But looking at the overall structure of Infosys and the IT space in particular, sustaining of that level, we could witness some real sharp move in Infosys. So we can keep a close watch on Infosys as well.
Okay, Manappuram and Infosys, two stocks to keep on your radar. By the way, just want to point out that we, hit a fresh high at open today, 24,598. Very close to 24,600. That's the record level on the Nifty. But I also want to get in your thoughts on a DMart. The company came out with its numbers over the weekend. Performance has been good, although margins have slightly, seen a dip on a YOY basis. Gross margins have been strong, and the company added somewhere around 3 stores in the last quarter. DMart, how is it looking? Because the stock has been holding on to that 5,000 level. More upside on the charts, or would you say that it could now see some range bound moves going forward?
See, overall, if you look at DMart, the trend is positive, no doubt about it. The trend is trying to gain momentum. That's something which it is trying for quite some time, because on 18th of June, the stock had rallied significantly from almost 4,700 levels to 5,080. So that was a sharp rally, and then the stock went in for consolidation. It's unable to breach its recent high on 19th June, that is 5,219. So 5,200, 5220, 30, I would say 5,200, 5,250 should act as a zone of resistance for the stock. If the stock is to rally, because if you go back in time, the stock at a point of time in the last quarter of December 21 had made a high of 5,900. So there's a long way to go for the stock if the stock is to rally significantly. Looking at the structure of the stock from an intermediate term, long-term perspective, that's positive. So it's to be better to be on the side of the bulls, but it needs to sustain over the 5,200, 5,250 for any major meaningful rally.
Okay, that's the view on a DMart. But before I get my next guest on board, I want to just ask you your thoughts on a Zomato. The stock has hit a record high at open 232. That's the kind of level it has clocked, in early trade. The company has, of course, hiked platform fee by 20% to 6 rupees per order. When they introduced the platform fee, I think it was somewhere around 2 rupees or thereabouts, and they have gradually hiked it to 6 rupees. And I was just reading a report that Swiggy could actually charge as much as 10 rupees, to some customers as it looks to, make its debut on in the stock market. But of course, investors are clearly cheering this platform fee hike because it will aid profitability going forward. In terms of the charts, would you look at levels of 250, 280 anytime soon?
Looking at Zomato, we've been positive on Zomato for quite some time, because Zomato has, I would say, post the sharp correction, the stock has rallied significantly. It's been a multi-bagger from the lows, because at a point of time in the last quarter of December, it was around 170, then it made a low of 44. Currently, it's around 226, and there are no signs of decline in momentum in Zomato on the long-term charts. On the intermediate term trend also, we've seen some strong moves, but I wouldn't recommend buying at the current levels. yes, any correction is a buying opportunity. If you ask me what are the levels to watch out for, on the downside, 205, 210, that's a good zone of support. Ideally, if it corrects to that level, that can be a good level of buying opportunity because the next zone of support is below the 200 mark. On the upside, sustaining up the 215, 20 levels, the stock has a potential to rally towards 245, 250.
All right, that's it in Zomato. But with that, hold that thought, Aamar. We'll come back and take up all our viewer queries as well. Quite a few queries have already trickled in, but we'll try and take them up after my interaction with my next guest, who's joining me now. Anand Rathi, founder, MIRA Money. Anand, pleasure having you on the show. Let me begin by asking you, what are you making of the kind of moves that we've seen on the index, since 4th of June? It was a knee-jerk reaction to the election results. We saw a 6,000 point cut on the Nifty. But ever since then, we have hit fresh highs, now standing at, knocking at rather 25,000. Here on, looking at the pace of the rally, would you be worried about valuations? The price points are fairly expensive. So what are your thoughts?
Good morning. Thanks for having me, Nandita. Yes, there is a bit of a worry, especially when it comes to mid-cap. What we strongly believe is that, mid-cap should be, maybe correcting a little bit or may have a bit of a time correction is what our larger thought is. But when it comes to large cap, we are pretty comfortable. We believe the valuations are attractive enough for us to invest. We strongly believe there will be a bit more of earnings momentum that will come in large caps, and this should lead to Nifty scaling up higher and higher. In fact, I'm of the view that Nifty is cheaper today. It should have hit 25,000 by June itself. That is on the large cap side. Small caps, though the valuations are a little expensive, what we strongly believe is that earnings growth is being seen in small caps, and the companies, if they continue to deliver their earnings growth, we believe small cap valuation can be a little more stretched going forward too. My worry is more on the mid cap. So if I'm an investor today and if I want to invest the money for the next 4 or 5 years, maybe I would focus a little more on large caps, decently on the small cap space, but not so high on the mid cap space or so.
Okay. Let's talk about the near-term triggers now. Earnings season has just kicked off. Till now, we've had positive surprises from TCS. I don't know, whether to call it a positive surprise or whether the fact that, people had, investors had very little expectations from IT, given the fact that there has been no improvement in discretionary demand in the US. But looking at the report cards handed in by the likes of TCS and HCLTech, what would you really do with IT stocks now? Is this the time to get in? Because a lot of underweight positions are being reversed when it comes to IT, right? Because everything has become so expensive that people are looking for valuation comfort. Would you say that IT is one pocket that's offering valuation comfort now?
IT has actually rallied little more than what the real comfort would have actually been. But in our view, there are two bits to it, right? One, has a revenue growth bottomed out, in the sense, do we see revenue growth from here? And the second way to look at it is the sector, IT as a sector in terms of market cap or price, bottomed out, right? These are two different things, because market is generally a discounting mechanism, right? It always discounts bad and good news much before the real, earnings or the real news comes out. Let me go back to what the TCS CEO mentioned, right? He did say that the worst is still not over, which means that you may continue to see a bit of revenue growth, but you may not really see earnings growth. And that's my view also, because they are winning orders, not just TCS. Many other companies are winning orders, but I believe they are winning orders at a slightly lower margin. So revenue growth may come in, but earnings growth may not really come in, and that could lead so they maybe the earnings and the revenue growth may not really match to each other, and you may not see too much of a surprise going forward from the IT sector. But when it comes to IT sector valuations, I think they're attractive. A lot of bad news has already been figured out, and now that there's a bit of a surprise, especially when TCS came out with the results on Friday, you saw the market and TCS actually zooming up significantly. So my belief is that price-wise, I think it is looking like it has bottomed out, the sector in general, but revenue growth may not really be so high that you can, a lot of these rating agencies will go and upgrade them. Net, you can add a bit of IT sector if at all you don't have in your portfolio.
All right, so where do you expect the earnings outperformance to come from? Which are the pockets? Because, looking at the first quarter updates that have been trickling in from banks in particular, deposit growth is still lagging loan growth. So, banks, your thoughts, and where exactly will the outperformance come from in terms of first quarter earnings?
You said it right, Nandita. I think bank is the place where there will be an outperformance that should come in. Of course, loan growth being good and deposit growth being not good actually means that the sector is actually doing the right things. The only thing that they need is, where will they borrow from? So I think in this budget and RBI put together, they will do a lot of things to make deposit growth, or at least push a bit of deposit growth, so that banks can lend freely, because they're in the right position today to lend. They have a clean balance sheet. The capex cycle is looking like up, and then more or less, the bad loans are all out of the way. So I think banks are all set to go up, but then they need a bit of support so that FDs and deposits are made a little more attractive. And I think strongly that is where the real surprise, and it's high time that banks really come and deliver, in my opinion. The surprises can also come in from pharma, right? I think the sector has been doing well. In general, I think the sector is very, very highly cyclical in nature, and I think we are looking at upcycle in pharma and IT, as we have already seen. Like on last Friday, you saw TCS coming up with a surprise, and I think a lot of IT companies will surprise us on the positive side. So these are the three places where I strongly believe that there could be a bit of earnings surprise for the investors this quarter.
All right, point taken. But talking about the FMCG pack as well, we did see FMCG coming back in favor on the election day, and ever since then, there have been intermittent bouts of buying in the consumption pack. But of course, there are some signs of revival in rural demand. How would you really play that? Would you play it via FMCG names, which are traditionally, expensive stocks, high PE stocks, or would you play the rural theme via the two-wheelers, which, by the way, have already seen a very good run? So, if I asked you to choose between FMCG or two-wheelers to play the rural theme, which one would you pick?
So, interestingly, I will not pick both of them, primarily because I believe I would wait out on this rural story. The government has to do a lot of work to bring back rural consumption. There is a bit of rural distress, which we have clearly seen during elections, before elections. It has been widely spoken about, and just now it has got highlighted because the election results were not as per expectation. And that's when we figured out that, okay, rural distress is one of the reasons why we saw elections not going the expected way or so, right? So in my belief, I would wait. I would want to watch out for what the government does in the budget. I would want to see what are the measures that are going to be taken by this government, the budget, and going forward to make sure that the rural consumption is back, the employment is back, rural economy is back on track. And that is when, after that is when I would play. Now, given a choice, let's say we have taken care of rural distress. Given a choice, I would rather play two-wheeler than FMCG, because FMCG as a sector in general has been very expensive. In spite of the fact that they have been delivering 2-3% revenue growth, they have been commanding high valuations. So even if I want to build a rural portfolio, I would rather focus on two-wheelers, given a choice, as against FMCG.
Two questions regarding the budget. One, do you expect more consumption-driven measures now that we have a coalition government at the center? But also the fact that we've got a very handsome dividend from the RBI. We have strong tax collections. So can the government really balance it out between manufacturing and consumption? A. And B, in terms of F&O curbs in the budget, would you expect any drastic measures? Because we have seen euphoria building in the F&O market, and that has been pointed out by the SEBI also quite a few times. In fact, I think Money Control was the first to report that SEBI has in fact proposed several measures to curb the rapid growth in derivative volumes. These include increasing the minimum lot size of derivative contracts to 20 to 30 lakhs from the current 5 lakhs. Do you think these steps will affect retail participation in the market in a big way?
So I'll answer the first question first. And the whole idea, I think, is the government may not do too much change on the infrastructure. They will continue to spend more on infrastructure, because I believe that is one sector which will create employment, and government cannot tinker with employment at the moment, right? So I think infrastructure, impetus on infrastructure is continuing to be there. Now, with an additional set of money that has come from RBI, And we also have to go down the fiscal path, right? We have to get the fiscal deficit lower and lower. I think with the additional money, they would try and create more employment, because this government doesn't give money straight in the hands of the people. They want to create employment, and that employment should create income, and that income should create consumption, right? So my belief is they may actually revive the textile sector, because that can employ a lot of unorganic labor and things like that, right? So infrastructure and anything that can provide rural employment is something that is going to be the focus of this government, I hope. And in the budget, they will focus on those kind of sectors and not give money directly in the hands of the people. So that's the reason why I want to watch out for what the government and the budget does for rural consumption before I take a big call on, saying, everything is good, rural consumption is back and things like that. Now, when it comes to F&O, I am very clear that we are doing a lot of measures on trying to make traders avoid trading. I would rather do the other way. I would want education to go into people so that, not all F&O trades are bad, right? The picture that is projected is F&O trade is bad. No, the retailers are doing the right thing of not doing the right thing of using F&O to trade the right way. They should rather they're making it more speculative. But what I would want the government to do is, of course, increase the lot size so that they can curb retail trading, but change the mindset of using F&O as a speculative tool. That from that speculation, everyone is using F&O to get rich very soon. No, that is pure speculation. F&O can be used in multiple other ways, and that is where the education should come in. Maybe make certification mandatory, make net worth mandatory, and these are the curbs that can help traders. So that over a period of time, they understand the importance of F&O trade and stop using F&Os to get rich quickly.
All right, that's advice coming in from Anand. Stop using F&O to get rich quickly. I'm afraid, Anand, we're running out of time. I would love to have had a longer conversation with you, but I look forward to touching base with you again later on the show. Thanks a lot. Lovely insights this morning.
Thank you so much for having me.
Thank you. Let's go back to Aamar then. On that note, he's been waiting by. Aamar, let's take up all the viewer queries that are trickling in. The first one is coming in on the defense pack, defense and shipbuilding pack rather. Srivardhan Gupta wants to know your thoughts on whether one should book profits in these stocks before the budget. Today, shipbuilding stocks, at least the likes of GRSE, Cochin Shipyard, all of them are witnessing some bit of profit taking, 3 to 3.5% kind of downtick coming in on these shares. So particularly when it comes to the query that has come in ahead of the budget, should one take some profits off the table? What would you advise?
I would say that if I look at the charts of most of the stocks, the defense stocks or the shipping stocks, already we are seeing some sort of profit booking happening in these counters, because if I look at Cochin Shipyard, some of the technical indicators, they clearly point that the recent high which the stock had made, that could act as a short-term top. So that was 29.79. But the trend still remains very strong. So effectively what it means is that one can book profit. Again, if there is some correction, that could be a buying opportunity in the stock, because there is no trend change even from a short-term perspective. Looking at some of the other defense stocks like Bharat Dynamics, here we are seeing again the similar pattern, but here more of consolidation is happening in the stock. So yes, one can look at booking profits here. And looking at Bharat Electronics, again we are seeing some sort of consolidation and profit booking, but the trend still remains very strong. So ideally, if you can book profit, you want to book partial profit, you can book. Otherwise, on any correction, you can add into the stock, but they are definitely not shorting stocks as of now.
Okay, hope that helps you, Srivardhan. The next query is coming in from Kishore. He wants to know your thoughts on a polycab at current levels, whether one should book profit or accumulate. The stock has been stuck in a downtrend. Last 5 sessions, we did see the stock trying to make a feeble recovery. Very mild gains of 0.2% in the last 5 sessions. Is it time to accumulate this stock?
I would say, see, if you look at Polycab, what we've seen in the stock for the last almost 15 to 20 trading sessions, the stock has been in a correction. So from almost 7,300 levels, the stock is currently around 65 levels. And the short-term technical indicators, they clearly point that there could be further downside to the stock. The level to watch out for is 6,300 on the downside and 66 50 on the upside. That's the range that you can keep a close watch on. Only sustaining above 66.50, then you can expect some significant rally in the stock towards the 7,000 mark. Otherwise, the stock could go in for consolidation. In case the stock breaches the 6,300 level, then we could witness some sharp correction in the stock towards the 5,900, 6,000 level. So I would say rather you should wait for the stock, because the short-term trend is quite negative. Intermediate term trend, we've seen a decline in the momentum. Long-term trend though remains positive, but again, overheating is there on the technically on the chart. So I would say avoid entering the stock at the current levels.
Okay, avoid entering Polycab at current levels. The short-term signals aren't looking all that encouraging on this one. Next one from Abhishek Singh. He wants to know your thoughts on Poonawalla FinCorp. Is entry advised at current levels, or should one wait for quarterly results? Stock has not been doing all that well. We've seen the stock being stuck in a downtrend. Look at the 6-month chart or a 1-month chart as well. No encouraging signs there. But how would you advise the investor or trader to look at it right now?
So if you look at this particular stock, this stock has been on a downtrend. So if you look at on different time frames, on the intermediate term trend, on the long term trend, even on the short term trend, we are seeing some sort of selling pressure there is very evident on the charts. And on the short term trend, we are seeing some sort of consolidation, but I would say it's still early days, because the stock has got support around the current level. So if we go back slightly, I would say first week of June, the stock made a low of 396, and from there it bounced back towards 470, and then again it has corrected to 400 levels. So the stock is inherently weak. The structure of the stock is inherently weak, even from a medium term perspective, long term perspective. I wouldn't say it's very weak, but long term we are seeing consolidation. So I would say rather avoid the stock, and you should look at investing or getting into stocks which are more in an uptrend rather than stocks which are in a downtrend.
Okay, that's the call on a Poonawalla FinCorp. The next query from our regular viewer, Debu K, wants to know your thoughts on an SKF India. This stock has also been in a downtrend, but in the last 3 months, I think it has given positive returns. Any thoughts here, SKF India?
See, SKF India definitely seems to have formed a top. So the stock did rally towards the 7,350 levels in, I would say, in the third week of June. And from there, it witnessed a sharp correction towards the 5,000 levels. So that was a very sharp move. The stock is currently around 5,800 levels. Now the stock has gone in for consolidation. So if ideally you should avoid this. If it corrects further, see, the good level to enter this stock is somewhere around 5,300, 5,400 level. From where you can expect some upside towards 6,400, 6,500 levels. So that's the range which you should ideally look at. A long-term trend is positive for the stock, but the intermediate-term trend tells me that it could be in for consolidation.
Okay, SKF India could be in for a consolidation. Hope that answers your query, Debu. But the other stock which I want to talk to you about is IREDA. Good numbers, and stock clearly reacting to that. 6.5% uptick coming in there. The stock has been on a skyrocketing journey. Last 5 sessions itself, it has clocked in a 20% kind of a rally. Last 1 month, 70% up move. Has it topped out, or is there more to go? It hit fresh 52-week high today.
Correct. So if we look at the stock, the stock's uptrend remains still very strong, and the momentum is strong on across time frames, be it the intermediate term trend or the long term. We don't have that much of data to really analyze, but from a short term, intermediate term trend remains positive. And also what we've seen is that once the stock breached the 180, because earlier 180, 200 was acting as a zone of resistance. So that being taken out on 2nd of July, and from there the stock has rallied by almost 50%. The volumes have been significantly higher over the last few trading sessions. So fresh entry at the current levels I wouldn't recommend, but yes, any pullback in the stock. So ideally the good level to enter is around 260, 270 could be a good level for entry. On the upside, the stock has a potential to rally towards the 325, 330 levels, as the technical indicators clearly points that there is no decline in bullish momentum in the stock as of now.
Okay, no decline in bullish momentum in IREDA despite a 70% up move in the last 1 month. A couple of more queries that I quickly want to take up with you. Aamar, Abhishek Prakash wants to know your thoughts on Zentek. This stock has been doing well, but last week we saw some bit of profit taking kicking in. Should one use dips to buy the stock?
So if I look at Zentek, it's currently trading around 1350 odd levels. And the stock seems to have formed a top. So I wouldn't recommend entry at the current levels because one of the technical indicators that is indicating that there could be the stock could be in for consolidation, but yes, the stock's overall uptrend remains intact. Levels to watch out for the stock is I would say on the downside around 1250, and whereas on the upside 1450. That's a range for the stock.
Okay, that's the range on the stock. Hope you've taken note of that, Abhishek. This one, the next one rather, is on a Repco Home. Pon Rajesh wants to know your thoughts. Home finance stocks have been in focus, of course, but within the pack, how is Repco Home looking like on the charts? I think we seem to have lost the connection with Aamar there, but let's quickly take a look at what the market is doing at the current juncture. We'll get him back. Nifty cruising along that 24,550 mark, around that level. Sensex as well, 80,600. The mid-cap index although has given up its gains and it's now trading in the negative zone. The Nifty Bank index also looking iffy on the charts, but we've got Aamar back. Aamar, Repco Home is the stock we were talking about.
Yeah, so Repco is more or less losing steam and momentum. So a fresh entry definitely is not advisable. Those who are long, they can look at booking profits. And the level to watch out on the downside is somewhere around 530. That's a zone of support. 530 is a good zone of support. If that level is reached, that could be a buying opportunity. But on the upside, 580 is a zone of resistance. So it's more of a range play in Repco Home.
Okay, that's the thought then. But there are 2-3 more queries. I'm afraid I won't be able to take up all of them. But how are you really viewing easy trip planners on the charts now? This one is coming in from Jiffin.
So if I look at this particular stock, the stock has been in a downtrend, and currently it's trading around the 40 odd levels. So the stock is, I would say, avoid the stock as of now. Don't get into the stock.
Avoid that stock. But then very quickly, one last query from Vijay C. wants to know your thoughts on a Sudarshan Chemicals. He wants to know whether he should hold, sell or book profits. He had bought it at a level of 825 rupees.
Sudarshan Chemical, overall the trend remains very strong on the intermediate term, long term trend, and we're not seeing much decline in momentum. The stock did consolidate. I would say in the first week of July made a high of 964. Then next week it made a low of 852. Currently it's around 922. So there's a tussle going on between the bulls and the bears, and the bulls have the upper hand. So there's only one level I would say watch out for, 930 on the upside. Stock sustaining above 930, stock could rally significantly. You could witness a 5% rally on the upside. And however, if the stock starts trading below the 880, 890 level, then we could witness some sharp correction in the stock. So you can look at booking part profit and holding the rest if it sustains over the 930 levels.
All right, that's the view then on Sudarshan Chemicals. I hope that answers your query. But with that, I'm afraid we've come to the end of the query segment and we've come to the end of the show as well. Aamar, as usual, thanks a lot for taking out time and joining in and helping our viewers navigate their holdings as well. Look forward to connecting with you again sometime soon.
Thank you.
Well, on that note, of course, leaving the markets in good stead, although we've fizzled out a bit from the open. The mid-cap index, as I was mentioning, is back in the red. The Bank Nifty also in the red, but the Nifty IT pack made a fresh high in today's session. HCLTech continues to be the top mover, 4% gain coming in there. You have other names like Bajaj Auto in focus because numbers will be coming out for Bajaj Auto this week. M&M doing well. Ultratech Cement on the back of an upgrade by a global brokerage. You have Cipla, Maruti Suzuki, all of them in good stead, but what's not doing well is Grasim, Asian Paints, and some of the metal names like Tata Steel as well. But with that, we are completely timed out on this edition of Opening Bell. Of course, I'll be back at 3:30 p.m. with Closing Bell. Don't forget to tune in for that. And of course, till then, you guys stay tuned to Money Control for all your other news and updates, and have a great day.